You're listening to an exclusive Mining Maven podcast interview which is for information and educational purposes only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Today's interview is with Andrew Bell, Chairman of Red Rock Resources, and was recorded on Wednesday the 9th of May 2012.
We're with Andrew Bell, Chairman of Red Rock Resources, on a rainy day in London. Andrew, thanks for joining Mining Maven today.
Great pleasure.
Now, there's a lot to talk about generally within the business, but can we look at the Kenyan operations first, the gold operations? Yeah. Can you give us an update on the technical progress on the ground?
Yes, on the ground we are coming out with resources for all the different deposits that have made up the resource there historically. As you know, there's a 43-101 resource of about 1.1 million ounces. We have re-drilled those various deposits in order to get more geological information, and also because although there was 1.1 million ounces, the distribution of that, the grade of that, were in the one case unknown and in the other case rather low. It was just over 1 gram per tonne overall. And yet we know that the artisanal miners from surface are mining in all these areas material, and frankly it's not worth their while doing it unless it's sort of 15, 25 grams per tonne. So there is high grade there. Now what we wanted to do is to identify the alignment of the veins, the structures, any shears, potential high grade zones, potential open pits that might be higher grade within the resource envelope. And so we have done what never been done before, which is did a lot of diamond drilling on all of these areas, combined with surface mapping and structural interpretation, huge number of cross sections. Eventually we will get some more information, for example at KKM, which is the first one where we've already produced a new resource, which is a JORC resource. We have not just a whole lot of cross sections, but we're beginning to understand something about the geology, and it's considerably complex. There are a lot of different alignments of the veins within those systems, and therefore doing a long section along this is much more complex, and we haven't yet arrived there. But what's been interesting is just how valuable the work we've done to date has been, and how much information we are beginning to get about where the high grades may be. Because the key to increasing the resource will not be just increasing the number of ounces, but increasing the grade that we can identify in different parts of the deposits or in step-outs from those deposits. And the key to profitability will be identifying those high-grade areas and being in a position to mine them first, very probably. So the work that has been done and where we've begun to come out with results at KKM, we're going to get KKM West, we're going to get Nyanza, we're going to get Gori Maria, and then we will get MK, and that will all be within the next month and a half, 2 months. And so there's going to be a lot of news flow out of Kenya.
And in terms of on-the-ground operations, you maintain a team there and you're carrying on work?
We have a lot of local geologists, very good local geologists, and we have a team, and we have people coming and going from here to there all the time. So yes, it's an extremely active phase because our geologists are working hard on all the preparatory work with the external consultants who are drawing up the new resource. And as they come up with queries and ask for some things to be checked and redone, we are constantly having to go back and redo that. So the interpretations are coming from us on structure. They're then being assessed and questioned by the external consultants, and then they're putting together a picture of the resource. And usually what they do at this stage is they produce an internal pit shell to make sure that they're getting it right when they give us indicated or inferred resources for an area. But that intensive work is in process, and it really is very intensive.
Okay, that's the technical side of operations in Kenya. You announced on the 19th of April your agreement with Aerial Partners for rationalisation of the Kenyan interest. Can you explain what's happening there?
Yeah, Aerial Partners are ex-RAB lawyers and executives who have therefore huge experience in dealing with the smaller company sector in the United Kingdom, but also in Canada, and they were also participants as RAB in the fundraisings for Kansai, so they know all the players involved, and I would say that a very considerable preponderance of the shareholders of Kansai appear to be thinking along the same lines, which is that we've got to rationalise and simplify the structure of the holding of those interests, and if we can do that, then we can get a much higher valuation on that deposit.
Okay, and how likely do you think this will be?
I think it's very likely that, as in all these things, there's an easy way to do it and there's a difficult way to do it, and we're trying the easy way first, and if there's resistance to that, we'll go the difficult way, and the difficult way would be very unpleasant for some people because we don't think that Kansai has been particularly well managed, but we are expecting that we will be able to do it the pleasant way.
Okay, moving on to Colombia. You announced in early April a quarterly update from Colombia. I know you've just returned from there. Can you give us the latest from those operations?
Colombia is a small operation that has, in some investors' minds, got an unreal importance. I feel I shouldn't be comparing myself to Napoleon, but I do remember that when the British were running the Peninsular War with a relatively small number of troops under Lord Arthur Wellesley, later the Duke of Wellington, it was described by Napoleon as a running sore because he had to devote so many troops to trying to contain Wellington and the local rebel troops that worked with him. So, you know, in the context of Napoleon's vast operations, this may have seemed very small, but it was a nuisance and absorbed too much of the resources of his armies and his thinking time, his strategy and so on. And in a way, Colombia has been a bit like that. It's been a running sore in that it hasn't yet operated at the level that we would want it to. It hasn't been by any means a disaster because it's been producing gold at a relatively good grade, but it hasn't met expectations, and working with the local management has not been as easy and cost-free as we expected, and we've had to replace them progressively and get in very professional people, and we have more or less completely replaced now the original team. We were moving from exploration to doing some production, and that was always going to be a challenge. We were moving from English-speaking cultures to a non-English-speaking culture, and that was always going to be a challenge. We were taking on an old mine that where anything you did was needed to be changed would be happening 400 meters underground because it was 60 years old. And that's a bit like keyhole surgery, so that's a challenge compared with opening a mine from the surface. And I think in all the circumstances we stabilized and took control of this relatively well in the early days last year. What has been disappointing is the failure to make further progress since. And so I have had to involve myself in the last month or so and went out there and had a look at things and look at the various options. And the various options are very obvious. We either stand still and make things work well, or we accept an offer, and we are always getting offers for these assets, and take a profit and dispose, or we advance and put the assets into a bigger structure where we can deploy our skills in exploration and maybe bring new mining operations into production from surface, where we're able to control all the variables much better. When you look at those options, I would say the fact that the disposal one would involve a profit means that there's always a way out. There's no kind of crisis there. The keep things as they are option means that we assess that the plant and the metallurgical laboratory are good facilities capable of expansion, not needing further investment beyond minimal amounts, and capable of operating very well. The risk in the keep things as they are is that the mine itself is unpredictable, in that although it's rich and will be rich, we don't have good visibility of what's down there, and therefore grade control is a challenge. There are high grade zones, and we can be producing from them or mixing that with lower grade material at the moment, but because there hasn't been enough mine development, do we have visibility beyond a month or two out? So with more mine development, we can increase that visibility. With going down to the next level, from level 7 to level 8, we can increase that visibility. And what's important is not just the visibility of the amount of ore we have, but knowing where the high grade is, so that we have grade control of what's going into the plant and know that it's going to be above our cash break-even level. But what we really need for visibility is exploration, and that means you block out resources. There are no real resources at that mine at the moment. Now, there are two ways of doing exploration. One is from surface, where you go down 400 metres before you even get into the right zone. That's expensive. Or you do underground exploration, and that requires some infrastructure work. And so in order to keep things as they are, you have to decide first that you're going to be able to operate it reasonably profitably for now, but the risks of finding yourself mining low-grade ore and mining for a short time below your break-even are low, and that you're willing to eventually make the investment of doing the underground exploration, although that is not so great. And eventually, to really improve that, you would probably want to put in some new access, which would be a slightly bigger capital investment. But all of this is possible and is well within our capabilities. When you look at it, you'd say, what would that raise the value of the whole thing to? And you say, might be a few tens of millions. Now, what would Kenya potentially be worth? Might be hundreds of millions. What would what we're doing in Greenland be worth? If we're successful there, hundreds of millions to billions. So then you think, how much of our energies do we need to apply in order to make this work, and is it worthwhile? Then the third alternative, do we actually go and get exploration ground from neighbouring landholders around what we have and make a bigger company and perhaps list it on the TSX as a combination of production and really interesting exploration potential. And I think the exploration potential there is fantastic. The geology is great, and the surface of what's possible has hardly been scraped. The thing is that if we were doing it purely as exploration, it would make sense. If we do it as exploration combined with a mine, we still have to be sure that mine is not going to be an open wound. And if we get rid of the mine, does it make sense to retain the exploration ground around it? Or will anyone give us the exploration ground around it? Because if they gave us that, they'd probably expect us to commit to spend a certain amount of money there. On the other hand, maybe that would be the right thing to do, because then we'd be going back to doing what we know we can do, which is good exploration, rather than being mediocre producers at the moment of something that isn't big enough to be able to apply real expertise to it, or recruit real expertise. So we have these interesting decisions that I think we have to make, but in making them we'll be guided by reason and logic. And what we're not going to do is make the mistake of thinking that pride is involved, or that thinking that this asset is more important than it really is, because to the success of the company, this is a relatively small piece of the puzzle.
Andrew, in fairness, I'm not entirely sure whether that leaves me optimistic or pessimistic about the Colombian operations. Can you sum up in one or two lines what that all means?
Yes, I think it means that in terms of whether we're going to make a loss on our investment, no, we can be sure that we can provide against that. We have offers that are much higher than the amount of money we put in. In terms of whether this is going to be a loss or a profit from the value that people may have imagined that it could have, and that perhaps at one stage we would have imagined it could have, then it would be, if we disposed, it would be a loss on that imagined value, which was never realized. We will still have had a profitable and successful investment, but not as good. There is still the window open to making it very profitable as an investment, or in disposing of part of it and using the fact that we now know Colombia to get assets that can take us on to the next level. But whatever we do, we should make the brave decision and the one that is going to be best for shareholders, and not just try to preserve a position because we find it difficult to walk away or admit a reverse. Because in mining, even more than in exploration, you're going to have the occasional reverse. And if your reverses are ones you can still make money out of, well, thank God for that, because it could be much worse.
Okay, so this is pride is worse than a fall type scenario, potentially.
Well, if your fall ends up with you on a higher rung, in absolute terms, that's not so bad.
Okay, well, I
but
suppose
I do feel bad for shareholders in that when we went into this thing, we went in with higher hopes than has so far been realised, and that was reflected in our tone, and even more people who took up our tone and went further than we did had expected something much better, and we do sincerely regret we haven't been able to deliver that. However, what I would say is that we are in a very exciting part of the world. We believe there's enormous exploration scope around where we are, and that we believe it is possible to make a success of mining there and even more of exploration there. And we are disinclined to get out completely, but we do have to look at different strategies, because it may be that some things can be succeeded at, but would just be too difficult and absorb too much energy. And in that case, our clear duty is to find things where we can make more money more easily by better application of resources.
Okay, I think what would genuinely worry investors is that in a company that obviously has finite resources, you only have so much money that you can invest on developing the business. We've talked about Kenya, which clearly is a huge opportunity. We haven't yet touched on Greenland, and I'd like to go through that in a second, but if you have huge opportunities in Kenya and I think Greenland as well, should you really be allocating resources to something that's proving exceptionally difficult?
Yes, that is always the question. And if we did devote resources to it, should we be devoting resources to developing an old mine with all the challenges involved in that, or should we be devoting resources in country to fresh exploration of targets we think we begin to understand quite well?
Okay, great. Now moving on to Greenland, this is potentially a huge project. Could you give us a brief summary as to where we are and the next stages of taking it forward?
At the end of this week, we begin mobilisation out through Iceland to Greenland, and so a lot of the expense that we have in this exploration has been incurred already, and there'll be a lot of that comes now at the beginning of the season, then a certain amount comes right at the end. But everything has been so much pre-planned that it's just sort of unbelievable how organised it all is, and we haven't done anything that makes me so proud as this, although our exploration last year in Greenland made me feel very proud indeed. When I see that we've even for our camp there got a whole box of DVDs, films that people are going to be watching, that we managed to buy very cheap from someone who is selling their entire collection, it makes me suddenly realise that we're going to have 35 and then 45 people at the maximum out in this camp. We're going to have permanent facilities like showers, kitchens and so on. We're going to be doing some really serious exploration with at one point we expect 3 drill rigs operating there, and to do that up there with the logistical problems when you haven't done it before, that's a tremendous achievement and a great tribute to all the people that we've had working on this.
Okay, so what's the targets for 2012 for Greenland?
We have a very promising hematite target that we are aware of already, that is just by the edge of a deep water lock and would therefore be infrastructurally extremely easy to exploit. That is a high value target for us. We have a magnetite target elsewhere, which we will explore because we think we'll learn a lot from that exploration. We expect to get a couple of mineral resources out of the work this year in 2 different areas, and we expect that in the course of our exploration out there we will be able to identify other hematite pockets. The magnetite we kind of got already because we got that from the geophysics, because it's magnetic. The hematite, we have not found it all yet. We've found 1 or 2 occurrences which we stumbled across or found because of their relationship with the magnetite areas. I'm fairly confident myself that we will find other targets, but this one target alone could be an absolutely massive value addition if we're successful in drilling it.
And in terms of success in drilling, when will you know if you found what you're looking for?
Well, see, we know what some of the samples they're graded at, and we can see, because we can see in, as it were, cross-section from the photographs we took last year, the thickness and the true thickness at 1 or 2 points of the horizon that we'll be testing, which has a quartz capping over it. And so we are fairly confident in what we will find there, but until we've drilled, we can't say it's there. And until we've tested it, we can't say what the grade is. But we do expect that we will come up with a resource, and we are quite hopeful that we will come up with something that will be very good quality, similar to Mary River. But for me to express any degree of certainty would be wrong. I mean, we have to, because we're explorers, be always optimistic, because that's what keeps us going. So if I say, we are in our minds saying something's 50-50, it probably means it's really a 20-30% chance, because all exploration is like that. The chances are always lower than you think they are. However, we will, I'm sure, get a resource out of this, and a resource will prove that there is an iron ore province there.
Okay, and then from a strategic perspective, what does that mean? Do you get people knocking on your door?
We've already had some discussions with some quite large entities who are interested in what we're doing. Obviously, if we can prove, say, 50 million ton hematite deposit at high grade, that will create a certain amount of interest. But again, even if it's easy to exploit, who will be interested in 50 million tons of hematite? Not so many people. If we can say we found this and we think it opens the area to the discovery of hundreds of millions of tons of hematite, then there would be extraordinary interest, we believe.
Okay, I think it's fair to say that on various discussion sites and so on, there has been mention of is the company able, with its financial and operational resources, to properly outline what might be in Greenland? Or is this something you need some help with at some stage?
Well, the early stages of delineating a resource of iron ore are actually not that expensive. They're very big deposits, so you're going to have to put in a certain number of holes. The holes themselves are not deep. What you're drilling through may be quite hard, and the holes can be probably quite widely spaced, because you should get good continuity between the holes. So it's rather different from, for example, gold mineralization. We have an expensive program this year, but we do expect it to come out with resources. And I say that with iron ore exploration, getting your inferred or initial resource can be quite cheap. For example, in Australia, it might be hundreds of thousands of dollars. Drilling it to get to higher, more closely spaced drilling to raise the category might be millions of As we've seen with Mount Ida doing a bankable feasibility, it's going to cost nearly $50 million. And bringing Mount Ida into production would cost billions of dollars. So at each stage you add another zero. But the initial stages of proving up a resource, which quite frankly is where much of the value is added in proportionate terms, that's where you get your huge uplift in value. That is well within the capabilities of a small company. If we were talking about magnetite alone and not hematite, I would say it's more difficult, because with magnetite you always know you're going to have billions of dollars of infrastructure because you're going to need to upgrade it. With hematite you're talking about direct shipping ore as your target. That means you basically stick the stuff in a bucket and carry it home.
Thanks, Andrew. At the moment, there are just over 884 million shares in issue. Share price just over 2 pence a share. So market cap's about £18 million.
Yep.
Doesn't seem like a great deal, does it, for the assets that we've just been talking through?
No, it certainly doesn't. Particularly when you take account of the value of the Jupiter shares, where we have 72 million. And the price has come down from nearly $1 Australian to 20 cents odd. It really seems ridiculously low to us, because Jupiter is about to bring the cheapy manganese mine into production, which will be one of the world's biggest manganese mines, and will have a multi-decade life and will be a price leader.
Okay, and if you look at that particular asset of Jupiter, what's it worth in a sensible market environment?
I don't know. I think at the moment people are undervaluing it because they don't understand that it is actually going to be able to go out by rail and ship, and they think it's going to have to be trucked out. And we're all waiting for the announcement by Jupiter, which will give more information about that. But the key thing about this is once it's in production with the neighbouring mine, without a lot of resource, it's now the best asset in the Kalahari Manganese Basin, and it's got the infrastructure and the railhead and everything. It's been very well planned. It is going to make whoever owns it into a fairly significant, if not dominant, force in the manganese market for a very long time to come. Therefore, if you're in the business of being a major in the steel feed business, or if you want to dominate trading in a particular commodity, this is going to be a trophy asset. It immediately takes you with one jump into the top table. And I can think of a number of majors that would be very interested in this. And Pallinghurst being structured, our partners there being structured more or less as a fund, this of course is the way that they will be looking at it. They will want to have a major buy it out at a big price within the next very few years. And I would have thought that an asset like this gets a premium price, not a discount price, because it's irreplaceable.
Okay, but at the moment the Jupiter shares 20 cents or so per share. You have, is it 74 million shares?
Yes, at 72 million, I think. And sometimes people say to me, well, would you buy Red Rock shares or Regency shares? And I think to myself, well, if I had money just at the moment, looking at sort of risk reward and the size of the opportunity in the mine about to come into production, I'm not sure that I wouldn't be buying Jupiter shares. But then if Jupiter shares go up, I'm happy to say that should result in a significant increase in Red Rock shares and even perhaps in Regency shares. So you get 3 for the price of 1.
Well, there does seem to be that price chain, doesn't there?
Yeah.
But at 20, just to make it easy, 20 cents a share with 72 million shares owned, that's about 14.5 million Australian dollars.
Yeah.
So about just over £10 million or thereabouts, out of a market cap of about 18 million. But you have other investments too. How are they doing at the moment?
We do is known, have a shareholding in Ascot Mining, which was along the same gold trend we're on in Colombia, and was similar size, similar issues, and we thought we could help out there. Got in at what looked like a very low price. Our investment there is still in the form of a loan, yielding 10%, We also have options. We're waiting for them to get listed on AIM, which they repeatedly said they're just about to do. If they do, that will be an opportunity for us to reassess. But if we can get, say, £1.5 million back out of that in cash or more, maybe that's what we should do. In the meantime, we get paid £150,000 a year for our travel.
And with regard to Resource Star, what's the latest position there?
I would not be surprised to see news out of Resource Star in the comparatively near future with some developments there. I think the assets are actually strong and good, and one of the problems Resource Star has is that it's in the Australian stock market, which is, if you think AIM is bad, you should look at the ASX. The second problem they have is that their identity has been primarily as a uranium company. And I don't need to tell you, first of all, with uranium, there was the issue of Fukushima, followed by, in America, they've now got 100 years supply of shale gas. In fact, they've got so much that the price has plummeted till per thermal unit it's 1/4 of the price of oil. And the producers are now screaming they can't make a profit, and they want to get permission to export it all. So why would anyone in America build a nuclear plant if they can build a plant that will run on gas from shale instead? And the third thing, of course, is France, which gets 70% or more of its power from nuclear, has just elected Hollande, who supposedly is going to close down the nuclear program. So every time you think that the uranium market could recover a little, it gets buffeted by some bad piece of news. In the long term, are China and other countries developing on a huge scale new nuclear power plants? Yes. Is that going to help Resource Star in the next year or two? Possibly no. Maybe we have hope deferred there. But what's the conclusion we draw from that? Is maybe Resource Star should be looking at doing some other things. And there are plenty of opportunities about.
Of course, the one asset that we haven't talked about yet is the interest in Mount Ida royalty, for which on the 2nd of May you announced the completion of a partial sale. So first of all, can you advise us how the cash from that sale will be utilised within the business?
Yes, obviously some of it will be going to finance some of the Greenland exploration this year, which is our major exploration program this year. If you look at where else we're operating, Kenya, we've just completed a major exploration program last year, and what's happening now is a process of assessment and producing resources, and even after those resources are out, we'll be continuing to assess and do structural work, and so Greenland will be predominantly the operation that requires money this year, so that's one thing. Then, of course, you could say general working capital purposes, which is always the case. And we have had the strategy in the last couple of years that we tried to do half of our spending from sale of assets at profit and half of it from perhaps new issues or other sources. But the low price of Jupiter has made it relatively unattractive to sell Jupiter shares, and we have compensated for that by selling part of the royalty, which has the additional benefit of laying off risk there, Mount Ida, and also putting a value on the half of the royalty that we retain. So we've got $6 million in so far of a $14-15 million sale price, and the 50% left in our balance sheet is therefore has got a benchmark value on it of about $15 million. And when the Jupiter bankable feasibility on Mount Ida is completed at the end of this year, if it's completed on schedule as we expect, provided the result is positive, which again we expect, that royalty would be worth more. But in terms of how we see ourselves going forward, yes, we do see ourselves continuing to finance ourselves partly by sale of assets that are reaching the end of our investment cycle, of which the Jupiter shares is one, the royalty is another, and only beyond that by issuing more stock or whatever. Recently we had to issue more stock, now we've been able to sell some royalty. So this, of course, reduces our dependence on going to the market for cash. which is something that is pleasing to us, because we don't like dilution any more than other shareholders.
What should investors look for, do you think, as to the potential share price drivers, assuming, of course, that the market is reasonably sensible in the near future?
When I look at Red Rock at the moment, what I see is a company that does real exploration, that has excellent projects, and whether any one of these projects to come right would be a huge success in terms of the current market capitalization of the company. Whereas when I look at the downside, I see that guarded by the value of our listed holdings, in particular Jupiter. So when I look at risk, reward, I see a company that is as good, to my mind, as any in the market, and has been undervalued for some time. This can't continue for much longer, and we look forward to an improvement in the market, because then, if not before, people should start looking for opportunities and thinking positively, and they will see the value that we have.
Thanks, Andrew. Now, we know investors out there always have their own questions and have lots of things that they'd like to know about the company. So you are going to host for them an investor afternoon at some point in June, further details for which we will send out, but that will give investors the opportunity to come into the offices, have a discussion about the company and have a tour around to see what goes on in the Exploration head office.
Yes, we'd really welcome to have investors come here, because they would see that apart from what appears on the surface, there's a lot of work that happens behind the scenes. And when you come here, you can see it. You can see the degree of technical expertise and the depth of management that we have here. And I think that, particularly because I'm the spokesman of the company and therefore it's my voice you hear, people are often not aware of what lies behind me in this organisation, and we do welcome the opportunity to show you that, because this, after all, is where shareholders' money is being spent, and where the planning of the spending of the rest of it is being done.
Andrew, thank you very much for spending the time with us today.
That's a real pleasure. Thank you.
The dates for the Regency Mines and Red Rock Resources investor presentation and office tour are currently being finalised, and we expect them to take place sometime during June. We will be emailing subscribers with details as soon as we have them. In the meantime, if you would like to register your interest in attending, please email us at info@miningmaven.com. We hope you enjoyed listening to this exclusive Mining Maven podcast interview, which is for information and educational purposes only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Remember to go to our homepage at www.miningmaven.com to sign up for all our latest updates.